Speaking to a Democrat about Joe Biden being the party's nominee in 2020, Barack Hussein Obama famously warned, "Don't underestimate Joe's ability to F things up." And true enough, we're seeing with our own eyes, stats show how Americans paid nearly 50% more in credit card expenses last year compared to the year before President Joe Biden even took office. To be exact, in 2023, U.S. credit card holders shelled out $157 billion in interest and fees on their credit cards, an increase of $51 billion compared to 2020. Meanwhile, credit card declines are at the highest in 13 years, according to Moody's Analytics, as inflation-battered shoppers have charged up a record $1.13 trillion as of the final quarter of 2023. Now, that news is bad enough, but now JP Morgan Chase is piling on. They're warning their 86 million customers that they have to start paying for their bank accounts. According to their CEO of Consumer and Community Banking at JP Morgan, Marian Lake, it's coming from these new regulatory rules from the Biden administration that cap overdraft and late fees. Though it may sound nice in theory, lower overdraft and late fees, Lake says Chase will be passing along those increased fees to customers, which would then put an end to now free services such as checking accounts and wealth management tools. And she says that she expects that other banks are going to follow suit. Now, if you combine this with the sad state of people's credit card debt, Republicans are saying this is all an example of how Biden's economic policies have triggered what they say is a cost of living crisis for low-income Americans. And true enough, guys, half of Americans feel worse off than 4 years ago under Donald Trump, and they rate the former president's economic experience far higher than President Biden's. What about you guys? Do you feel like Biden's policies are directly affecting your wallet? What's in your wallet? No, I'm just kidding. But seriously, guys, $35 trillion national debt crisis. Your retirement is at risk. Thanks to President Joe Biden, our debt is through the roof. Inflation, skyrocketing. Your retirement savings, vulnerable. But here's a bright idea. Gold and silver. With gold eyeing $3,000 an ounce, it's time to think smart. Imagine preserving your wealth amidst this financial chaos. I urge you to call my friends at Priority Gold to find out how they can help you diversify your savings with physical gold. Thousands of Americans just like you have placed their trust in Priority Gold. Text GOLD, G-O-L-D, to 800-405-GOLD for a free guide on how to diversify your retirement with precious metals. Discover the steps to fortify your future despite government spending. And guess what? You could qualify for up to $5,000 in free silver. Text GOLD to 800-405-GOLD. Do it now because later might be too late. Fortify your retirement today. I know that a lot of critics are calling out Joe Biden for these policies because though they may seem intended to protect consumers, they may actually be backfiring by increasing the cost of other essential banking services. I mean, sure, the cap on the fees, it's meant to alleviate the burden on those who can least afford it. However, the reaction from the big banks like JP Morgan, they're suggesting a shift in how banks plan to manage their profit margins. By the way, guys, if you haven't already, please take a second, hit the like button for the video. I really appreciate you. Thank you so much for subscribing and sharing these videos. You guys always help me out a lot, so thank you so much. So if banks begin charging for services that were previously free, like checking accounts and wealth management tools, then who's really paying the price here? It seems like the average consumer could end up shouldering these costs, effectively negating any kind of savings from these reduced fees. Yeah, thanks, Biden. But stay tuned, guys. All the details in today's video. We're going to go ahead and dive right in. So here's Fox News radio political analyst Josh Krasher. He's talking about how donors have begun backing out from the Biden campaign. Why is this relevant to today's discussion? Well, I'm going to let you guys think about it in just a second, but watch this first.
Here are some of the headlines out this morning. NBC says it's already disastrous. Biden campaign fundraising takes a major hit. Sources close to the re-election efforts say fundraising is set to drop possibly by half this month. A campaign spokesperson pushed back, saying grassroots dollars were strong. And then the president goes into, let the elites be the elites. Another follow-up at the end, they said, it doesn't matter. If we don't get donations, we'll do it without them. Man, has that switched. Any of these, the magic pill that gets him out or keeps him in between Nancy Pelosi, Clyburn, donations, Obama, is your sense someone's got the magic bullet?
Well, boy, it is such a big deal when one of your leading fundraisers says you are incompetent. You don't have the mental acuity to run for president, as we heard George Clooney just say yesterday. That's going to dry up big dollar donations for the time being. We're hearing a lot of reports, too, that even the small dollar donors who were giving money to the Biden campaign, even after the disastrous debate, that's slowed down considerably as well. Now, I think this is sort of a staring match between sort of the anti-Biden forces in the Democratic Party and the White House.
I mean, think about it, guys. With President Joe Biden running out of campaign money, where do you think he's going to turn to? This new credit card policy sure didn't come out of thin air. Now, like I always say, guys, follow the money. And in this case, maybe there's a connection between Joe Biden's shrinking campaign war chest and his new policy that many experts say just ultimately benefits these financial institutions. Now, like my uncle told me, we should end corporate donations for good. Corporate influence has done nothing for the American people. I mean, just look at this. Americans' credit card fees have surged 50% since Biden became president. Now, let me repeat that for everybody. Last year, Americans ended up paying nearly 50% more on credit card interest and fees than they did back in 2020, right before President Joe Biden took office. And sure enough, Republicans are rightly bringing up their own concerns over the cost of living crisis facing voters ahead of November's election. In 2023, folks dished out a whopping $157 billion in interest and fees on their credit cards. This is an increase of $51 billion compared to 2020. Also, credit card delinquencies, they hit their highest mark in 13 years, according to Moody's Analytics. And with inflation taking a toll, consumers pushed their credit card debt to a record high of $1.13 trillion by the end of the year. Meanwhile, banks are pocketing record profits from these high interest rates, especially since the Federal Reserve cranked up those interest rates to a 23-year high. I mean, you gotta wonder whether they got it all optimized to squeeze out the most money from the average American. You know what I mean? Then you think, is this what they mean when they say Bidenomics? A survey conducted earlier this month by Financial Times and Michigan Ross revealed that 28% of Americans said credit card debt was one of their biggest sources of financial stress, and a whopping 80% are most worried about inflation. No wonder recent surveys show that about half of Americans believe that they were better off under Donald Trump when he was president. So a majority of those polled also said that the economic performance under Trump, who is expected to battle Biden in a rematch for the White House, was far higher than his Democratic successors. Since Biden stepped into office in January 2021, cumulative inflation has hit 18.5%. To try and counter that with some good news, the Biden administration just announced a new rule just this month to cap all credit card late fees, part of what they're calling the White House's push to end what it calls junk fees. Now, this new regulation from the Consumer Financial Protection Bureau sets most late fees at a maximum of $8 unless banks can explain why they need to charge more. So their headline says this change could save Americans up to $10 billion a year. But you know me, guys, I always like looking behind the headline and peeking behind the curtain. And sure enough, I found out that this new Biden policy doesn't necessarily lower costs for average Americans. In fact, the next bit of news that we're going to cover is JP Morgan Chase warning its 86 million customers that they may have to start charging customers for their accounts. More on that one later. But first, guys, just taking a quick moment here. If you're finding our discussion insightful, don't forget to hit the like button for the video. It really does help out the channel. And thank you so much for subscribing and sharing these videos. You guys are amazing. Now, I've been hearing a lot online about how we should vote for the man who sacrificed his wealth for this country, not the one who sacrificed his country for his wealth. And sure enough, this new policy from Biden certainly makes me think twice about his motivations. See, while the Biden administration is hailing this fees cap as a great thing, the Wall Street Journal reports that the country's biggest retail bank, JP Morgan Chase, is warning that it may begin charging customers for their accounts. Now, this would impact some 86 million customers. Marian Lake, CEO of Consumer and Community Banking at JP Morgan, confirmed that the potential charges are a result of a new regulatory rule from the Biden administration that cap overdraft and late fees. So Lake says Chase will be passing along these increased expenses to customers, which would put an end to now free services such as checking accounts and wealth management tools. And she says that she expects other banks will do the same. So let's be real, guys. The idea of charging for services that used to be free isn't exactly new. Remember, over 10 years ago, a lot of banks talked about adding a service fee onto debit cards due to changes in regulations. Y'all remember that, right? Good thing most of them backed off because they were worried about upsetting customers. But now, thanks to this new Biden policy, the scenario may end up playing out again, particularly as consumers struggle with inflation and higher cost of living. So the proposed regulations would set a maximum fee of $8 for late credit card payments and $3 for overdrafts. They also introduced introduced new capital requirements, making banks hold more reserves against mortgages and credit card loans. Banks are warning that this could limit the availability of consumer loans. So as JP Morgan Chase CEO Lake pointed out, it's not practical for many of the services to be free if we won't be able to draw from these profit pools. Now, of course, whether those rules go into effect could depend on the results of the November election. So Donald Trump could strike down or dilute them, and banks have brought lawsuits to prevent them from going into effect. I heard Texas temporarily paused it in court, and for good reason. I mean, if they're going to cap these late fees and whatnot while putting a monthly fee on people's accounts, then they got another thing coming. Honestly, this kind of news really makes me wonder just how much out of touch Biden's administration is with the common folks. President Biden and his administration are all about how great this economy is doing. But let's be real, guys. Most of us are more worried about our own wallets than the broader economy. And right now, it feels like the forecast for our family finances is pretty much cloudy with a chance of meatballs. A recent survey from payroll.org found a whopping 78% of Americans are living paycheck to paycheck, and this is up nearly 10% from last year. Auto loan delinquencies are at a 13-year high. Student loan debts ballooned to $1.174 trillion, and hardship withdrawals from 401ks have jumped 36%. So it's not exactly the rosy picture that the White House is painting, is it? And pawn shop. Let me tell you guys, we really should start paying attention to pawn shops, as they're often telling a story that the big reports miss. So especially as most Americans don't have an extra $1,000 in a bank account, and still 20% of Americans don't even have a bank account. So instead, pawn shops often act as a rainy day fund for a lot of these people. And right now, pawn shops have a glut of inventory because people are selling more than they're buying. This spells desperation. When there are fewer buyers than sellers, when folks aren't coming back to pick up their pawned items, it's a clear sign that they're sliding deeper and deeper into debt. So basically, it's showing how lower and middle income, middle class families just don't have enough money to get by and pay their bills. Here's another insight the Biden administration does not exactly want to focus on why people are so gloomy about the economy. In December 2023, wages were reported to be up 4.3% year over year. Now remember, those are pre-tax wages. So by the time hardworking middle class Americans pay federal, state, Social Security, and Medicare tax, they're barely up 3% in real after-tax wages. And with inflation, many middle-class families, they're feeling like they're moving backwards, not forward. Even retirees are feeling the squeeze. Their 3.2% cost of living adjustment in 2024 just isn't cutting it with inflation. We're at a point where basic needs are pushing people into a tailspin of debt that many won't recover from without like some type of personal bailout, and nobody wants to see grandma having to pawn family treasures to cover the rent. With debt levels sky high, delinquencies spiking, and pawn shops piling up inventory, it's pretty clear that a lot of us just are not seeing the benefits of Biden's economy. Now, while a few might be living like kings and queens, for many, it's more like scraping by from one pawn to the next. Honestly, guys, how long can the folks in Washington ignore the signs that the economy isn't really working for most hardworking Americans? You know what I mean? I want to hear from you guys. Do you think that these new Biden fees are going to help, or are they just another sign that our president's out of touch with the people? Drop your thoughts in the comment section down below, guys. And if you found today's topic intriguing, you definitely do not want to miss out my other video where we cover a heated exchange between White House Press Secretary Karine Jean-Pierre and Fox News' Peter Doocy. Karine Jean-Pierre was put on the hot seat by Peter Doocy, and it's a must-see moment. So make sure to check that video out after this one. And hey, guys, thanks so much for hitting the like button. Thank you for subscribing, and I'll see you on the next one.